I am looking at my Ethereum bear market capital allocation spreadsheet. Let's see how you can use this spreadsheet and get the best out of it. In this top portion, you can enter your values. Only cells with blue numbers are meant to be entered by the user. The results of calculations and your capital allocation table will be shown here below. Let's have a look first at this left-hand side, where you can enter prices that determine the price range for your capital allocation. You have two prices to enter, the top price and the bottom price. The top price may be the current price of Ethereum at the time when you start planning your capital allocation. The bottom price determines your expected bottom price of the Ethereum bear market. You must be okay even if it takes months for that price to materialize. Now, there's no guarantee that that price will ever happen. In other words, your bottom price is the price that you must be okay with even if it's never reached, or if it's reached and the price actually drops through that price and goes much lower. Now, when you have top and bottom prices determined, you'll see that there's a range of prices here that is being divided into different price levels. You have a choice in this table to make the price distribution in two different ways. One way is what is called log or logarithmic price distribution, in which the ratio of two prices that are next to each other is always the same. In this case, it is 10%. So 1377 is 10% lower than 1530. Also 1239 is 10% lower than 1377, and so on. This price distribution is shown on this chart. The other price distribution that you can have is when you uncheck this check mark. This price distribution is called linear price distribution. The price difference between the two levels is constant. For example, 1610 is $90 more than 1520. 1520 is $90 more than 1430, and so on. You can also see the linear price distribution on this chart. The chart updates automatically. As you can see, linear price distribution is described by a line. Thus, I can flip between the two price distributions by ticking and unticking this checkbox. I have a comment here that says that when the box is ticked, or when you're using logarithmic price distribution, you're actually more conservative. That means that prices will be more congested towards the bottom of the range, which consequently means that you will have acquired more Ethereum coins, thus the more conservative approach. I would suggest you keep this checkbox ticked, and thus you will use logarithmic price distribution. If you change top price or bottom price, all the numbers in the table will update accordingly. For example, we can try $2,000 as a top price. We can also try $800 as a bottom price. Now let's keep the default values that I originally set, 1700 and 350. On the right hand side, you have two more parameters that you can change. One of them is the total capital you have available to invest in this case, Ethereum. The default value is $12,000, but you can use pretty much any number you like. Let's say $3,000 or $55,000. As you can see, every time I change these values, all the numbers in the table below update accordingly. Whatever number you enter as your total capital has to be the number that is the sum of all the purchases you make along the way. Now the question is, how does the spreadsheet determine these USD values to invest at each price level? By design, they are meant to increase as the price goes down. How much they increase, you control by this percentage number here, which I call conservativeness. Let's say I put number 0 there. That means all of my purchases are going to have the same dollar amount. Now, even though those dollar amounts are same, as the price goes lower and lower, we can purchase more and more Ethereum. That is clearly seen on these charts. As you can see, $800 is the dollar amount that we want to invest at every price level. However, the number of Ethereums we're getting is more and more. Now, I also say that larger percentage number here means that you're more conservative. By default, I have 6%. 6% compared to 0% means that I'm going to invest fewer dollars at the top and more dollars at the bottom. Therefore, I will acquire, in this case, around 20 Ethereum coins. Whereas if I have 0% here, then I get only 18.15. Not a big difference, but still something to take note of. If you want to be even more conservative, you can increase this percentage number as much as you want to. Let's say 20%. Very small purchase at the top, much larger purchase at the bottom. 24 Ethereum coins accumulated. Let's try 50%. Well, now these purchases are so small that they're basically zero. As a matter of fact, I have a limit here that if the purchase price is less than $40, I turn it into zero. Due to Ethereum fees, sometimes it's not very practical to purchase amounts that are less than, let's say, $40. In this scenario, I will have a large purchase at the very bottom. Now again, this might be way too conservative for you. You may not be willing to wait for $350 Ethereum in order to put all this money in it. Ultimately, it is your choice. However, if the price does go to 350, you will be very happy that you have waited with all this money so you can buy at that price level. Investing is simply a trade-off of your decisions. Now, if this is not conservative enough for you, you can go as high as maybe 100%. That means that you will have acquired 31 Ethereum coins by the bottom. Now, if you don't want to be conservative, or I should say if you want to be more aggressive, you can actually go with negative numbers as your conservativeness. For example, minus 1%. Now, when I venture into negative numbers, I will see that my purchases are getting smaller and smaller as the price goes down. Now, that might be exactly what you want. Now, in this case, these dollar amounts are getting smaller, slower than the price is dropping down. Therefore, we still end up buying more and more Ethereum. I can be more aggressive and use minus 6%, for example. You can see what numbers we're getting now. Here is an interesting percentage, minus 10.5. In this case, we start with a large purchase, and then we have smaller and smaller purchases, whereas Ethereum coins that we obtain first start increasing and then decrease. Now that's just one very specific percentage. Normally, if you would go with even more aggressiveness, you would end up with fewer and fewer Ethereum coins that you can buy at every price level. Keep in mind that the shapes of these charts depend on the relationship between this percentage number and this percentage number. We were at minus 20%, and if that's not aggressive enough, you can go to minus 50 or even minus 75. Pick your number. Bottom line is, when you're aggressive, you're putting a lot of capital at a very high price and less capital as the price goes down, to the point that maybe in this case, you basically run out of capital before you even reach the bottom. In this case, your bottom is $732 where you have your last purchase. Therefore, if you are too aggressive, you need to be okay with holding your position if the price craters way below your bottom. My recommendation is to be more conservative. So from minus 75 to 75, you can see how these two charts flipped the purchases from one side to the other. Again, 6%, which is the default value, is sort of a moderate percentage and it's probably the most reasonable for majority of investors. So have fun with this spreadsheet, find your particular numbers, save your spreadsheet so you can stick to your plan in future. You may need to stick with that trading plan and your table for months to come. Thank you very much.